it's going to go up tremendously. But that's why you have to underwrite for that on the front end, which is also why a lot of deals no longer make sense.
What is going on, guys? Welcome to today's episode of the Collecting Keys Real Estate Investing Podcast. It is 2025 at release of this episode. New year, new us. Dylan, how was your holiday?
I mean, it was good, man. It was short and sweet, kind of. I was working most of the time, but we didn't even travel much for the holidays. We kind of stayed home and did our own thing with the newborn at home. So it was low key, but it's kind of what I wanted.
Yeah, there you go. I mean, I bet you appreciated the rest, because how old's the kiddo now? 4 months?
Yeah, three and a half. Yeah.
3.5. Yeah, so super young. Yeah. And then Dan is not joining us today because we're recording this before the New Year's, and he is still wrapping up some stuff for kids on Christmas break. Because of course he has the plague that all people with like youngish kids have, where everyone gets sick in the family. So he's juggling that. But right on, man. Yeah, mine was pretty low key. I always kind of get itchy during the holidays because I don't have kids or hobbies or anything else that I like to do. And so I just want to keep grinding away and working. That's just not true. Most of my hobbies are like either traveling or like nice weather stuff. And usually I'll go skiing, but like the snow's kind of been iffy in the surrounding areas. So I haven't been too motivated.
You seriously get like a winter vortex at the beginning of January?
Yeah, over in Seattle area.
No, I think it's going to be like countrywide. Like,
oh, really?
We even get negative, like even here where I live, like in the -20s, I guess, like on the 6th or 7th of January.
Oh, really?
Yeah.
Oh,
so if you own rental properties, make sure your tenants, keep their water lines running and dripping.
Dude. Yeah. Have you had a pipe burst at a rental property yet?
A couple of times.
That's super fun. Yeah.
Oh, yeah. And they always happen in like the middle of the night or some very inconvenient time of day.
Absolutely. So. Yeah. Probably one of my favorite ones is when we had that happen at our lone Airbnb, and it had been empty for a little while, and the tenants showed up and they're like, yeah, there's water everywhere. We're not staying here. So, yeah. Yep. And of course they were checking in at 11 p.m. But
one thing, here's a quick side note just for the audience. If you learn from my mistakes, is it was like the second rental that we ever bought, and they built the kitchen onto the back of the house, like an addition. But so they ran all the piping and stuff, but they didn't insulate basically anything underneath this addition. And so, of course, that's what burst as soon as, that winter when we had it. So if you buy a house with a dish on the back, especially with plumbing, make sure you check underneath it.
Yeah. Yeah. We had one of those too. It was an older house and it wasn't an addition, but all the plumbing was underneath the house similarly, and it wasn't insulated, and they burst. And basically it like got up into underneath the floating floor, like the LVP.
Oh, yep.
And so we have this this video that the tenant sent us. And it's funny for two reasons. One, because the tenant's walking around and she's pressing on the floor, and you can see it like sliding. And it's just like a classic, like landlord, like what a situation. But the second reason it's funny is because the tenant, she doesn't have her shoes on. And she has these like really chubby feet with bright red toes. And when Dan sent me the video, I was like, I can't stop looking at the feet, dude. Like it's slightly disturbing thing. It's like we should sell this. But there's probably an audience, or we could monetize this picture, this video.
That's the mind of a true entrepreneur. You're like, how can I sell my tenants' feet pictures? That's the title to this one.
Oh my God. But anyways, cool. So going into 2025, we have a slight restructure of the show. So we're going to have a couple different segments that we go through every single week with these. So the first 8 to 10 minutes, we're going to talk about kind of news and events. Then we're going to talk about specifically things with our business. And then we're going to talk about a weekly lesson that we have learned. And then we'll send you guys on your way for the week. So Dylan, to kick us off, news and events for the week in the real estate or business or economic world. Got anything that is getting you excited right now?
I don't know about excited is the right word, but I think something that kind of is synergistic, what we talk about frequently as far as the inflation and affordability issues, is the biggest thing is one is the Fed cut rates again and mortgage rates went up again. So we're still seeing a widening of those two effects, which, a lot of people did not expect. And then two, it's how taxes and insurance are now more and more of like your PITI payment than they ever have been before. So like a decade ago, your taxes and insurance were like there would be less than 50% of your payment. That was like, but now that number is like 9% of single family mortgages, taxes and insurance are more than half of their mortgage payment, which is wild to me.
9%. That is crazy, actually. Do you think that's because, so let me think about that again. So it's more than half of their mortgage payment period. How much of that do you think is people that have had properties for like a long time? And so their mortgage payment was low like 20 years ago. And so basically it's just grown and grown and grown and grown over that period of time.
I don't know. I would actually almost go the opposite round. And because the way I'm thinking about it is every time you buy a new property and it gets reassessed at a new amount, like the property taxes, at least in our area, skyrocket because they don't really reassess accurately until there's an actual sale, in my experience. And then anytime we buy a property now, and I always tell the seller, like, they're like, my insurance is $50 a month. I'm like, okay, well, it's going to be like $150 for me at a minimum. And so there's just like I don't know why like insurance companies, I guess I understand why they would go to somebody else, but when you buy a place brand new, there's such a spike in premiums now that I think that almost has to be it. I don't know.
You think it's insurance for the most part or taxes?
Taxes.
That's the property
taxes. Has to be taxes.
Yeah. Because I think everywhere except California has the where property taxes don't do reassessments, a change of ownership, whatever that process is called. I don't know if anywhere else does. But like up here, dude, like the property tax increases have been insane. I've talked about this a handful of times over the past few weeks. But I mean, I have like a triplex that I just got another tax increase for $200 so a month. So that will be since I bought that place in 2019, my total monthly tax increase now is going to be almost $800.
Yeah. I literally just had friends of mine that bought a place in 2021 or 2022 and they got reassessed and they texted me like, Dylan, our property taxes, our escrow payment went up $700 a month. How is like, we don't cash flow. Like, how is this possible? And I'm like, your previous assessment value is like 115 and now it's 260. Like, so of course it's gonna go up tremendously, but that's why you have to underwrite for that on the front end. And which is also why a lot of deals no longer make sense when you do that. Like,
yeah. I mean, and it sucks though too, because like at least with things like CapEx and maintenance, that goes towards the property. Taxes are by and large the sunk cost. Same with insurance. I mean, that just goes into the sphere and your city buzzes it or does whatever else they do with it.
I think the my frustration. So like in my Hamilton County, you can go into the tax summary and they'll give you a pie chart of where that tax money is going. 75% of it goes to like the school system.
Nice.
And Cincinnati public schools is very poorly rated.
Yeah.
And so it's like, okay, you have a very large chunk of money that is not being allocated correctly. So like that's kind of the biggest headache for me as a property owner.
What are you talking about, dude? The school police definitely needs that tank that they bought. For
right. It's just like shit like that. And then are they adding more admin? Are the teachers just increasing salaries? Yeah. Like there has to be some objectifiable way of like, how is this money's getting used? But
yeah, you think so. I mean, I do think that going into this next year, there are a ton of lead indicators leading towards general seller distress. I mean, monthly payments getting really weird like that. Like, it's going to be a lot of people that are going to suddenly be in homes that they can't actually afford anymore because they're not making any more money. You have all these balloon payments. Everyone that was getting these rock bottom loans in 2020 and 2021 from these commercial lenders that had 3 or 5 year adjustments. Those are all going to be coming up this next year. And there's going to be people getting absolutely rocked by that when all of a sudden their cap rates and rents are down, but their mortgages increased to 7 or 8% from their commercial lenders, right? Like the general cost of living, people think that Trump's going to make eggs cheaper. No, he's not, bro. It's already come out. He doesn't give a shit. Like everything's getting more expensive. Not only that, they're outsourcing all the good jobs to people with HB1s now. So
going straight for the controversy.
Yeah. Yeah, I mean, like, there's so many things that are going to indicate people not being able to afford their homes anymore. And from an investor standpoint, that's weirdly an opportunity.
Yeah, but one thing that you touched on Trump, he actually tweeted, it was today or yesterday, I don't know which one, and today's the 30th of December. But basically, it's like he feels like there's a 1929 type euphoria in the stock market and general economy. And for any history people, they call it like roaring 20s, but ended in like the September, October timeframe of 1929. Then you had the 30s, which was the Great Depression, right? So I don't know, if he knows he's taking office and they are expecting some kind of downward in the economy, or a recession of some kind, and he's just forecasting like, hey, this isn't my fault. Or what
Probably.
kind of the
Yeah.
plan is there, but it sounds like they're already setting the stage to say, hey, there's going to be some economic turmoil, maybe beginning of 2025.
Yeah. Which is an interesting position because I feel like politicians, they always try to lead with opportunity, right? And in my mind, if they're coming out with that, they're basically trying to set the expectations low because happiness is, was it expectations minus reality or reality minus expectations,
yeah,
right?
yeah.
And so if your reality ends up being better than your expectations, then you look awesome. So is it reverse psychology or are they just foreshadowing? Who knows? But I do think that if you're trying to buy discounted assets, it's going to be very, very,
Yeah.
abundant in 2025.
One thing, then we can go into the next segment, that this to keep what a lot of people I follow are keeping close on is the labor market. So like the report will come out in January. But basically it went from like 3.5 at the low to 4.3 at the latest reading, and it's gone up incrementally. And I think around that 4.5, 4.6 range is where a lot of economists are like, hey, like we need to really watch this. And they're basically looking at the supply and demand for housing as, okay, we know there's a limited supply and there's a lack of housing, but the demand side has been kind of propped up a little bit, I guess. But they're saying if people start losing their jobs, you're going to lose all of that. And so that's just maybe another factor to keep eyes on.
Yeah, absolutely. And I think that the lesson, just looking at everything, what people can take as actionable about it is try to get a strong cash position so you can make moves quickly if you need to. Make sure that you have your lead generation going and make sure that your brand is positioned so it's actually findable and people actually trust you when they do need to make decisions. Because if you're kind of like the under the radar person or people can't find you, or you are now, you have these super motivated sellers that are coming out and they're trying to decide between 6 different companies, they're going to go to the one that looks the most legit and can move the fastest. You're going to want to be that person.
Yep.
Cool. All right. We can wrap that up. Let's dive into our businesses for the week. If I can do like a sound effect, like a
yeah, like kind of like a bigger pockets, like the deep dive thing.
Yeah,
you got like a submarine like thing. I think if I remember right, like yeah, that's so
yeah,
that's fun.
So all right, what are the updates from your business this week, Dylan? I know you're crushing it because you gave me a little preview before we hopped on.
Yeah. So well, December was decent for us. Like it wasn't anything spectacular. It was kind of normal. I did have 2 deals that pretty much fell apart at the last second.
That's
one seller just plain didn't show up and has been ghosting us ever since. So that's fun. And then the second one, there's going to be a decent spread. And then title search came back. There was a $19,000 lien, like in a second position that kind of kills the deal. So that's just part of the business though. That kind of goes on. But on top of that, right now, I mean, Q1, we have, I think 11 in escrow, and some of those are already assigned. Some of those still working with buyers with a couple more offers out. And I will tell you, a lot of this came from working my ass off the past couple of weeks. And also I said this on the podcast, I reached back to basically every seller that I talked to the past couple of years and said, hey, do you got another property you want to sell? I bet half of those come from that.
That's awesome.
They want to start off 2025 with another sale.
Yeah. I mean, that is our industry's version of a referral.
Yeah.
Right. Like people always talk about getting referrals for service businesses or trades businesses. Having someone that, you just bought their house for 50 cents on the dollar that's going to like refer another seller. That's a weird thing. Like I think we've had that happen maybe once, but following up with people that you bought their property, especially obviously landlords, people that have inherited things, ask if they have any others they want to sell. That happens a lot.
Yeah.
Like a lot
especially
more
the
than you would expect.
The multi-landlord who honestly is just older and they're done with it. And the only reason they didn't sell them all the past couple of years is because of taxes.
Exactly. Or we've had like inherited ones too, where they're like, hey, so grandma gave us 10 properties. They're all empty and they're all trash, but we basically want to sell 1 a year going forward. And we just maintain that relationship year over year. Right.
Yep.
So that's
awesome.
Really
no secrets. I mean, and then, I guess on the business aspect of that, like I cannot do that much volume probably in like, 1 or 2 months without my assistant now who does all the transaction coordination, because now I can go back to 1, trying to dispo them, working with the buyers, but 2, like getting more deals, sending out more contracts. That time would either have to be spent doing miscellaneous transaction coordinator stuff, which I'm not saying is not important, but it's not going to drive any more revenue.
Yeah. Yeah. And that's, and it, you also have new responsibilities at home too, which would make that even more challenging.
Yes.
But
how's it going with you guys? I mean,
it's been like, coming out of the holidays, it's always tricky. So, like with our businesses gone over the past 6 months, we had this big national team. I unfortunately released most of them at the beginning of December. And so we're down to basically our local Spokane group. We have a couple VAs and we're doing a couple virtual markets. But those are like honestly just like cleanup. We're not necessarily advertising. We're just getting the opportunities that we still have. And so over the last like couple of weeks, it's been quiet, especially for me because we now have this little 4-person partnership here in Spokane and they all have kids and stuff. And so it was real quiet. And so it was basically me and my rock star sales VA, Jesse, just going through each day, taking down deals. And she actually got 2 signed around, which is pretty cool. Which were like just right out of the trenches, like ones that we'd kind of forgotten about. But going into January, we have 9 closings lined up right now, which are all things that we got signed around over November, December. Like a lot of the stuff that I should say 8 because one of them we actually found out is going to fall out. So you said you have like your property lien. This one's an interesting situation where the seller liked the price. We have a buyer assigned, and now the seller is wanting to back out because there was a property that they had their heart set on buying that they
Yes.
lost the bid on, right? So
Yes.
somebody else bought the house. So saying, we're not getting the house. We don't want to move anymore, right? And the question is always, well, how do you handle that situation? Do you let them walk? Do you try to get them to sign a first right of refusal? Do you try to force them to sell, which isn't the direction I would go? I don't know. What are your thoughts on those types of deals? Because they're not necessarily distressed. The house that they live in is kind of like Matt, and they just wanted a guaranteed sale to buy their new property. That was their motivation for calling us, was they wanted to be able to get that new homeowner contract and then have us execute when it made sense for them so they wouldn't have a gap.
Yeah. In my experience, usually like you just be very transparent up front with the seller, like, hey, we're a business. We thought we were going to, buy this property. We had money set aside, allocated for this. Would it be okay if we signed a first right of refusal or something like that to go move forward? And honestly, 9 times out of 10, they're like, yeah, I like working with you. When the time is right, we'll go ahead and sell it to you. But you just have to make sure you're following up with that and you have yourself protected with, whatever you get recorded at the county.
Exactly. Then if they say no, you break their kneecaps. No, I'm kidding.
Yeah. No, I mean, the biggest, actually, I'll ask you this kind of reverse, is I always like to get it the first right refusal for the price that I have, at that point in time. But a lot of the sellers like, well, what if the price changes? We sell this thing 3 years from now.
Mm-hmm.
So it's like, okay, we still get the first right refusal at what is deemed market price at that point in time, which might change.
Yeah. So we've done one deal like that where it actually came to fruition and we ended up getting paid. That one, it was interesting because we had our first right of refusal at our price. That was in like early mid 2020. And then when it finally came to fruition, it was 2022, 23. And the house was worth a hell of a lot more. And so what we did is we offered them to buy us out of our first right of refusal instead of exercising.
Oh, okay.
And it worked out fine. They walked away with like an extra $150K versus if they had gone with our first right of refusal and then we made $40,000 on it.
Yeah.
So like there are things you can do when it, like you can structure the language of it where it'll be at your current contract price or at a new assessed value, whichever's higher, right? Or whichever's, I can't want to say that, whichever's lower. People probably aren't going to agree to that.
Right. Yeah.
Or you can set it up where you get to exercise your contract price or you get to make a first offer on it. The challenge becomes is if you go that route, they don't always have to accept it, right? Because the first right of refusal doesn't necessarily give you the right to buy the property. It gives you the right to make an offer.
Correct.
And so they cannot sell it to somebody else without notifying you. So it always kind of leaves you open, right? If things change with their circumstances, but it is a way to at least make sure you get another shot on goal.
It's just part of this business. And like, they're like the 2 deals that we fall out, you had one fall out, you just can never count the money before it's in your account because things will fall out. Like, and it sucks if you're like, oh, I'm getting paid $15K next month. I can go and start my marketing spend. Like, just be careful with that. Make sure you have ample reserves.
And it's also why it's important to make sure that you're constantly balancing your acquisitions with your TC and dispo. Because if you are, like I said, if you're relying on that one deal to close and then it doesn't, and you've now been skipping on your acquisitions for the last 3 weeks, cool. Now you're at towards zero.
Yeah.
right? Which is a really tough place to be.
Yeah. We actually had one. I was a similar but different situation. 4 unit, walked it, got a decent price. And this lady, she signed the agreement. And she actually had her son living in it like $300 a month. But in our agreement, I was very sure, I was like, he's going to be, have to be gone, prior to us closing. And she's like, no problem. We actually have another house, for him to go to. And she owns like 5 or 6 properties around Cincinnati that are honestly like good parts of town. So she signs it literally like an hour later. She calls me. She's like, hey, I don't want to move forward anymore because my son doesn't want to move. And I'm like, okay, well, can I look at the place that he was going to go to? Like, you're right. Like you said, it was vacant. I went to that one and now we're under contract to buy that house from her. So like it kind of worked
Nice.
out in the end. And maybe, I don't have a first right refusal for anything for this other house, but I just feel like the rapport is there where when the time is right, that'll be another opportunity for us.
Yeah. Well, and there's also a psychological piece to that, right? Like where the seller acknowledges that there was something that they took from you, right? And they are going to be more inclined to accept your offer in that other house because it's like a this for that sort of scenario.
Honestly. And like, with the negotiating part of that definitely played a factor and we got it at a great price. So
yeah, that's awesome. But yeah, so, besides that one though, like we have some cleanup to start doing going into New Year because despite the team being pretty quiet, we still had a handful of leads come in. Direct mail was like relatively quiet overall, but we always get random like online leads and things like that come in over the holidays.
Are you doing any kind of different marketing than you have been?
We're going to be leaning a lot more on growing our brand going into next year. So we're in the process of kind of revamping our website and getting like our online reviews and stuff all kind of queued up and sort of figuring out what that looks like. But I do think that going into like the future of this industry, having a strong local brand that appears professional and is findable, searchable, has reviews, things like that is going to pay even more dividends than it has in the past. Just because there's so many people that have either built bad reputations for themselves or they are like have maintained these like really small, hard to find businesses. And we've found that we've started to lose business to more established brands. And so, you can always say like, well, they're bigger, whatever. My goal is, well, why don't we just get bigger than them?
Yeah.
So that's what we're going to be trying to do here going next year.
One thing that, the thing that surprises me with this off-market real estate stuff is they're like, okay, I'm good. The price sounds good. How does the process work? And I'm like, you bought a house. Like I thought some of this would be second nature, but a lot of them don't understand. And so you either have to walk them through that process so they feel comfortable, which is fine. I actually made a very short YouTube video of myself and then like kind of explaining the whole process with the little anime from like Fiverr and stuff. And now I just copy and paste that and say, hey, watch this. If you have any questions, like just let me know. And that's good.
That's what I guess that in the internet world, VSL, you know what that is?
I have no idea what that is.
Video sales letter. So basically the whole concept is that when you are pitching somebody on something or somebody has just done like an initial purchase, you send them a VSL. Alex Ramosey's team does this a lot. And I've actually seen a lot of different ads from influencers that are now stealing this for him. Like, well, I'm the best at this. Here's how you use VSLs to sell your bullshit. But it's a pre-recorded thing that sets expectations for what happens next. And I've actually thought about doing these on the real estate realm, like when it comes to making offers, of having different VSLs for people on your team that you can essentially text sellers so they know who they're meeting before someone comes out. Kind of like how have you ever had like a plumber or like an HVAC company from those bigger companies? So like, here's Tim. He's who you're working with today. And that way they know kind of who the person is, what they look like. It alleviates a lot of the stress around it. But with us scaling down, I haven't delved into that as much. But
I think those are great ideas though. I mean, a lot of people, especially in this like a lot of people are like their first barrier, their first like is like, am I getting ripped off? Am I getting screwed? And that's what you have to like build that trust through first. And anything you can do to minimize that, even with the VSL, I think is great.
Yeah.
Even when I go on appointments, like, hey, my name's Dylan. I'll send a picture. I have sent a picture of my photo ID. I'm driving a black, sedan. I'll tell them the name of the car. So that way everything they know when they show up is not a surprise.
Totally. And I think that's why having that strong company image going in the future is going to be so much more important because you're right, people are going to look for that. And I think the core reason behind it is if you go back to wholesale in like 2018, 2017, I wasn't wholesaling back then, but I was looking at wholesale deals and buying from wholesalers. The whole like industry honestly was based off of people not knowing what their properties were worth, right? You were ripping people off for the most part, like, to be honest.
I will say a lot of that too is people, I feel like, were overbuying shit, but they were right. They were right. I was wrong, but
Yeah, totally. But going into now, especially after the real estate boom in 21, 22, everyone knows that their property is worth a lot more than they bought it for, right? That people have a lot more capabilities to see what their property is worth in general. The estimates are getting more accurate. It's so easy to see what comps sold for in your neighborhood, things like that. And so very rarely are you talking to a seller that is uninformed, but you are spending a lot more time talking to sellers that full on understand they're going to be selling for a discount, and what they're looking for is service and trust in the transaction, right? And if you're unable to provide that, or you don't appear like you're going to provide that, you're going to miss out.
Totally.
So those little things are going to make a huge difference.
Part of the sales pitch, Mike, is, like, hey, you could take it on market. You will get a higher price, and I'm going to offer you. But then you have inspections, appraisals, realtor fees. Like, you have all this stuff. You're basically trading price for convenience. Is what I can offer you. And
totally.
if you just, like I said, I feel like a lot of times intent matters in this business, and if you are just straightforward, they're like, cool, I can make an informed decision around that, and let's go forward.
Yeah. And as a perfect example, one of the ones that Jesse and our team got sent around this weekend, the seller talked to an agent on Friday. Okay. The agent said, you can probably sell, this is a major fixer upper. It's like, you can probably sell this thing on market as is for $300,000. Okay. And so the seller came back and was like, well, we offered 200 initially. And like, well, this agent's living at 300. And so we had some back and forth, and we said, I understand your agent said that. You're still going to do all this work needs to be done. If you do that, it's going to go on market. You're going to have to like clean all this stuff out, whatever. That's going to be the typical expectation of a retail buyer or a market buyer. So we're willing to buy it with all that stuff, but we're going to be at 225, and that's our highest and best. Mm-hmm. And after a couple of days of going back and forth, they decided to sign with us.
Yep. Right. One of my favorite part of those is they end up going with the realtor. It sits, or it goes under contract and it falls out twice. And now it's 6 months down the line, and they revisit the conversation. They're like, we could have saved so much time, man.
Yeah, I know, right? And now that, everything's getting different. Now, of course, it's always like they do that over the summer, and now they're trying to call you in November. I'm like, why? Like, why couldn't we do this 6 months ago? But cool. Yeah, so either way, I think both of us are keying up for a pretty solid January. Right on. And then last little segment, any good lessons from this past week, Dylan? This can be something big business-wise. These can be small. These can be, just like a little, like, I learned that if I have a conversation this way, or I call sellers this way, it yields me something a little bit better.
Well, I'd say one of the biggest lessons, kind of what we alluded to earlier, is work in the kind of the off signs when everyone else isn't working, because that's a lot of where this revenue is going to come from. And I think we just dropped a little bit of nuggets, but actually one thing I will leave the crowd to, I listened to, not to pitch another person's podcast that we do, but Hormozy just said like a 90-minute like end of year podcast. Mm-hmm. It was 90 minutes of pure gold. And it basically was like, he was like, you're probably not working as much as you should. It's probably taking longer than you think it will. And the great things are built over like consistency and time. And now that I've been doing this for like 3 to 4 years, full time almost, like, my financial picture is a lot better, but it's definitely taken longer than I've, hoped. And it actually, I was just having a conversation with another investor, and you look at our lifetime sales, right? It's, it's like, low 7 figures at this point. And I look at the bank account, like, where the fuck does all the money go?
Yeah.
And totally. So that's another thing. Like, capital management is another piece to work on this business. I think every off-market investor, especially once you flip, struggles with. I don't know. I'd say other lessons are just as cliche as it is. If you just keep going and don't give up, you will eventually find success in this business.
Totally. Yeah. Yeah. I think a good realization that I had this past week, as I had some downtime and I was trying to sort of plan what this next year was going to look like. Both, obviously I have both, like with our real estate company, as well as with our scale community, as well as with this lending company that we have. I was really trying to like forecast what growth looks like for these things. And it sounds so silly, but the realization that I had is that if you're even like a slightly seasoned entrepreneur, you know exactly what you need to do, but for some reason you don't do it. Right. Like
Yeah.
so often. And like I was really trying to like figure out strategy and those sort of things. And I was like, I already know the strategy. It's just not being executed. And it sounds like a silly lesson, but what I realized is so many people, they spend way too much time trying to find the secret or the perfect way to do things. And you should really just, get to work and just try stuff out.
Yeah.
You know,
Brute
people,
force and then leverage.
yeah, totally. And then people always want perfection. And something that I've realized is that like people that have successful businesses, like very successful, like talking tens, hundreds, millions of dollars, they're still weighing it like everybody else. They just have a better image, right? Or they've been doing it for longer, or they have better leverage through teams and people and experience. And so like when you're making decisions that are realistically like hundreds or thousands of dollars decisions, sorry guys, that's not a lot of money, just big picture. You kind of need to just go into the trenches and be willing to make mistakes. And if you do that, you will have a much better growth trajectory over the next 12 months.
Yeah. Yeah. And I'm going to rip from that and that podcast again. Is like the harder and longer you work, your expectations and reality of what hard work actually is just changes.
So different, dude.
And,
Yeah.
Even through pharmacy school and working during that, like, and now doing this business, like you just have to be willing to do those 8 to 12 the plus hour days at a time. And if you can do that, even for a month straight, like you'd be surprised at like what you can actually accomplish. And there's just no getting around it. Like that, like you said, people are trying to do this with a 9 to 5. Like, oh, I want to make 10 phone calls a day or send out 400 postcards and then do what you're doing. I'm like, good luck.
Good luck, dude. Yeah. You're competing with, me working 12 hours a day with my team that's doing it full time. So not only am I working harder, but I have leverage in terms of multiple people that are doing it 40, 50 hours a week. Like you're just never going to compete with that. Cool. Awesome. We'll just have to wrap up. Right on. Anything else, Dylan, before we head out of here?
Nothing to report. I think I'm expecting, I'm looking forward to a great 2025. I think both on personal and business, I think it'll be a lot of growth this year. So I'm looking forward to it.
Yeah. Same. Awesome, man. All right. Well, thanks for listening, everybody. And we'll talk to you guys next week.
See ya.